Teacher, may I ask a question?
Yes.
Thank you. Here, let me show you.
Yes. What's your question?
Uh, Wait, please wait a second.
Yes.
Uh, in this the first question, in question one, the situation five, you didn't give us any date. So I suppose when I write the title, I wouldn't
So,
have to write a date.
so don't worry about writing date if you don't have any date.
Uh, yes, and also in this one, they use the word him and his passbook. So when I write the title for the bank reconciliation statement, what should I say? Just the bank reconciliation statement.
Bank reconciliation statement for the year ended. Wait for me.
Okay.
Just write down bank reconciliation statement for the year ended. That's it. You don't have to write down any date.
Thank you. And just one more question. In the situation six, I know Kandan had already asked you this question the last section, but if you look closely, there actually the double O at the end. So I suppose it will be 118,000 or just 11,800. The cash, you actually write the two O at the end and not one O. So I just
Then
wondering
it's if it's that will be 118,100. Yes,
oh,
175. Remember, number are not missing, but I use the comma by mistake. I add one
oh,
more comma by mistake, but number are same,
thank
right?
you.
Yeah.
Teacher, I want to ask a question.
Yes.
Um, the question number
19
19
plus
is
product return. Yes.
yes, I don't really understand. Is that like cash return or that product is returned?
It means when we sold product to the customer last time, that sales was on cash. That's the meaning of this. Cash sold product returned by customer. That's the
Okay.
meaning of this. So when customer return product back to you, your cash reduce, not account receivable reduce. That's the meaning of this.
Oh, wait, what? Can you explain
When
it?
customer return product back to you, all right, so it has two meaning. One is sales return, sales return debit, and cash credit, or sales return debit and account receivable credit. Which one is the right answer? Which one is the right answer?
Number one. Is it number one?
Yes, that's the meaning of cash sold. That's the meaning of cash sold. Cash sold product means number one is the correct.
Teacher, I also have a question. Like number 17, um, you say that 20% discount paid to Miss Lucy on the cash sale of $1,000 product, which means we are we pay the discount for the customer or the supplier. For
Customer. You
this is
sell means customer. You never
mm,
sell to supplier. You always purchase from supplier, so you sell to customer. But this is cash sales, not credit sales.
Cash. Okay.
In simple language, number 17 means cash sold to customer, cash sales to customer with 20% discount. That's it. Doesn't matter Mr. Lucy, Miss Lucy, doesn't matter. The most important is cash sale, because when you sell product to the customer by cash, you never write down the name of customer, right? Exactly same thing. So I just write down the name Miss Lucy to confuse student, right? So be careful about it. So number 17 is a cash sales. Doesn't matter Miss Susie or Mr. Susie or anybody. It doesn't matter. Name doesn't matter when you sell product by cash. When you sell product on credit, then name is important, because that person going to become account receivable. So you should know the name of person who become account receivable, because you have to receive money in future. But in this number 17, you already sold product by cash. So you do not need to record the name of customer when you make journal entry. Is that okay, number 17?
Yes. I have one more question. Number 11. This one. It's a depreciation on equipment 10% of $2,000. So last time you teach us like for the depreciation we have for this one depreciation is your non-cash expense. So this one is depreciation and equipment, and the depreciation expense like 10% of $2,000, which is 200, and equipment is the access. So it's also account for $200 or 2,000. So that's
By 2,000. How many percent? So okay, can you tell me equipment will be debit or credit in this journal entry?
So this journal equipment will be credit.
Credit. How much value of equipment reduced because of depreciation? Can you tell
Equipment.
me?
Okay, it will be reduced to 1,800. Is that
No. How much value reduced?
value reduced?
1,800
200.
is after. Yes, 200.
Okay.
You understand that?
Okay.
Remember, it's a depreciation expense. Your equipment reduced by $200. Equipment is not if you write down 1,800, it means your depreciation reduced, your equipment reduced by 1,800. Equipment is not reduced by 1,800. After minus 200, 1,800 is the market value of equipment. So you don't need to worry about market value, because market value belongs to your another. But in journal entry, just you have to tell me how much is depreciation expense. That's why depreciation debt, and equipment credit. So equipment value is reduced by $200, not by $1,800. $1,800 is in your balance sheet when you prepare balance sheet. That is the previous topic, not journal entry.
Okay. I got it.
Anybody, any question? Any other question?
And also like there's sometimes we have the journal entry, we have 3 items, and how can we make the ledger for the journal entry that which have 3 items like that? Because the last time,
Okay.
yeah.
Yes, I explain you. So that's why you can make 2 journal entries, or you can make only 1 journal entries. But anyway, I'll show you. Yes, sometimes it's quite confused when you make journal and when you make ledger for 3 items. So you confuse maybe which amount you have to write down in the journal entry in the ledger. So let me explain you. So that's why if you make 2 journal entry, it will be much more easier. So let me explain you again. So let's say journal entry is bad debts, right? So cash debit, right? Bad debts debit, and account receivable credit, right? So it means, for example, 1,800 and 200, right? So we will prepare 3 T accounts. 1, 2, and 3. First T account is about cash. Second T account is bad debts. And third T accounts is account receivable, right? Now, cash debit because of account receivable. Cash debit because of account receivable. Now the question is, I should write down here 1,000 or I should write down here 800. What do you think? Anybody? What I should write down here? How much?
500.
800. Yes, because cash is increased by 800, not by 1,000, right? Now, again here, bad debts debit because of account receivable, which is 200. And account receivable credit because of cash and bad debts. So here you can write down here 800 and 200 because total is 1,000 and here total also 1,000. All right. That's why if you're making 2 journal entry, it will be much more easier. How? Like as here, cash debit, account receivable credit. How much? 800 and 800. Next is 1 and second journal entry would be bad debts debit and account receivable credit. 200 and 200. Now, no problem at all. Cash debit because of 800. You're not going to confuse because both amount are same here. So 800. Account receivable credit because of cash, 800. Bad debts debit because of account receivable, bad debts debit because of account receivable, and account receivable credit because of bad debts, right? So you have 2 options, whichever option you prefer. All right, so 2 journal entries are always easier, especially when you transfer information in your T accounts. So it's your choice how you do that. So again, if you get confused, then you make 2 journal entries to solve problem by yourself. So is that okay? Is that clear now?
Yes, I got it. But can I ask you one about the number 17 about discount for the customer? So last time you say that we discount for the customer that we lost. And okay, so I figured that for this question, like I think there are like 3 items, right? Like they are revenue, their discount pay, and cash. Right?
Yes.
Oh,
Yes.
Okay, I got it. Thank you so much.
Yeah. Any other question? Anybody? Yes. Yes. Can you copy the number 5 in the chat box and tell me? Situation 5. PQR check amount 2000 has been paid by bank. FBI should check here which were not presented to bank for payment. The debit in his passbook for interest. So what is your question? So if you don't see balance, so 0, easy. So means your cash book have no balance. That's it, simple. But again, read carefully, all right? If it's cash book, I say something about cash book, then yes, cash book balance. If I don't say anything about cash book, so no cash book balance, right? Yeah. So anybody else, any other question?
Sir, can I have a question?
Yes.
The bad debt recovered is what we receive or what we lost? So,
Bad debts recover means receive. What does it mean, recover? Recover means the money you already lost, you will recover it. The meaning of recover means something you lose and you get it back. So bad debts recovered means the bad debts turn to cash. Bad debts means the people don't pay you money because they bankrupt. Bad debts recovered means those people now they pay you money because maybe their financial situation is improved. So that's the meaning of bad debts recovered, means you receive cash from bad debts.
thank you, sir.
Now let's start with the next topic, which is the last step of your accounting cycle. What is your submission deadline for assignment, midterm assignment?
December 31st.
Okay. Now next is final account, the last step of your accounting cycle. All right. This is your topic 1, 2, 3, topic 4, right? Topic 4, which is financial statement or final account. Financial statement. Or we can also call it final account. Final account, the last step of your accounting cycle. This is the last step. Last step of cycle. Accounting.
Teacher, I think we study two methods, that trend line method and reducing
Yes.
balance method already.
Can you please tell me?
Yeah, we studying trend line method and reducing balance method.
We finished, right?
Yes, yes,
Yes. Yes. So that was topic 4.
yes. It's a topic 4, and we have finished this topic. Yes.
Topic 1 was introduction. Topic 2 was accounting cycle. Topic 3 was BRS. Topic 4 was depreciation. Yes, topic 5. Yes. Okay. Thank you. So topic 5. Yes, topic 5. So financial statement or final account. This is the last step of your accounting cycle. All right, final account. Okay. Now, before we continue with the this financial statement or final account, I want to tell you what is the difference between financial statement and final account. They are two different things. All right. Not much difference, but minor difference. So remember, financial statement has 5 components. Financial statement is a combination of 5 components. Which 5 components? Balance sheet, income statement, cash flow statement, statement of change in equity, change in equity, and notes, or we call it disclosure. Notes, or we call it disclosure. Some of you already asked me in the beginning of lecture, the teacher, what is financial statement? So this is the right time to understand what is financial statement. This is your financial statement. Financial statement is a combination of these 5 elements, right? These 5 elements are the combination of your financial statement. First is a balance sheet. You know what inside balance sheet. Balance sheet is a combination of total asset, total liability, and equity. All right, so it means total assets equals to total liability plus equity. This is your balance sheet, right? Income statement. You know that income statement is income minus expense equals to profit or loss. These two things, this and this, you already know that. This is not something new for you. Maybe cash flow statement, statement of change in equity, notes, or disclosure are new for you. All right, but I will not explain in very detail. I will give you just idea, because you don't have to prepare these 3. You have to focus only on balance sheet and income statement. Right. So cash flow statement is about cash in and cash out. Cash in and cash out is a cash flow statement. How much cash in, how much cash out, cash flow statement tells you. All right. Statement of change in equity. Statement of change in equity basically tells us that what are the reasons that equity increase and equity decrease. Reasons to make changes in equity. What are the reasons that make changes in equity? That is a statement of change in equity. Notes and disclosure is the other information like as the future planning of company, what company planning to do in future, what depreciation method company is applying, what material calculation method company applying, what different methods are company applying, right, to calculate the different things, right? So these are the 5 components we have. This is your financial statement. Now, what is final account? Final account only focus on just 2 items. Only focus on only 2 elements. Only 2 elements. This is 1, 2, 3, 4, and 5. Final account is only focused on 2 elements, which are balance sheet and income statement. So in final account, you prepare only balance sheet and income statement. You do not prepare cash flow statement, statement of change in equity, notes, or disclosure. So that's why another name for final account is we also call it primary financial statement. We also call it primary financial statement. So in topic 5, you will prepare only primary financial statement. All right. You will prepare only primary financial statement. You will not prepare full financial statement. So it means you will not prepare cash flow, statement of change in equity, and notes or disclosure. Everybody understand that? This is your topic 5, primary financial statement. The last step of your accounting cycle. Actually, last step of your accounting cycle is a financial statement, but you will prepare only primary financial statement. Why we call it primary financial statement? Because almost every type of users need balance sheet and income statement. Every type of users need balance sheet and income statement. Every type of users may not need cash flow statement, statement of change in equity, notes, or disclosure. Like as government may not interested in your cash. Government more interested in your profit. Right? So that's why balance sheet and income statement is a common financial statement that basically used by almost every users. But it does not mean that we don't have to prepare cash flow, statement of change in equity, and notes and disclosure. But of course, cash flow statement and notes are also important part of the financial statement. So financial statement is incomplete without cash flow, statement of equity, and notes. Is incomplete. But again, the shorter version of financial statement is a primary financial statement. Very minimum requirements or the information that almost every users required. Minimum information, which comes from the balance sheet and the income statement. All right. So in this lecture, you will learn how to prepare income statement and how to prepare a balance sheet. So this is your topic 5. Now let's start with the first component, which is income statement. We start with income statement and then we learn how to prepare a balance sheet. So let's start with the income statement. All right. Income statement, right? So the title of income statement is income statement for the year ended. So this is the title. Income statement for the year ended. Right. Income statement for the year ended. So we'll write down here the full date. Right. So let's start with the first. So you always start with the sales revenue, which will be given in your question. So sales minus sales return. Another name for sales return is, we also call it return inward. Return inward. Return inward means sales return. So sales minus sales return is your net sales. You got net sales. Now net sales plus other income. Other income. What are the other incomes we have? We have various types of incomes we have here. For example, we receive interest, receive dividend, we may receive rent, we received rent, right? All these are income, non-operating income, you can call it. We received maybe discount. That's also your income, right? Or we have maybe some gain on sales of assets. All these are your non-operating income, other income or non-operating income, right? That's your total income. We got total income. Total income. All right. After we have total income, we will minus cost of goods sold. Cost of goods sold. We call it COGS, cost of goods sold. Cost of goods sold means manufacturing cost. Manufacturing cost. Manufacturing cost means the amount of money we spend to produce product. All right. The amount of money that we spend to produce, this is your expense cost, right? So the amount of money that we spend to produce product, that's called manufacturing cost, right? Now, how to calculate manufacturing cost? Manufacturing cost, you have various things in manufacturing cost. So how to calculate it? So calculate like this. So let me write it down here. We have opening inventory. Opening inventory is inventory in the beginning of period, right? Opening inventory will be, everything will be given in question right here. Opening inventory plus net purchase. Net purchase. Purchase material, all right? If I say purchase, means purchase material. Net purchase, what does it mean, net purchase? Net purchase means purchase minus purchased return. Purchase return. Purchase material minus purchase return. Like we have sale, we have net sales. Sales minus sales return is a net sales. Purchase minus purchase return is a net purchase, right? So if in your question you do not have purchase return, then you don't need to calculate net purchase, or it will be your net purchase, right? Plus other manufacturing cost. Some other manufacturing cost. Other manufacturing cost. Like other manufacturing costs related to production or related to factory, because we produce product in factory. Related to factory. Whatever cost is in the factory, because factory is a place where we produce product. So what these are other type of cost we have. Like for example, wages for workers, all right? Some other factory cost, some other kinds of factory cost, like as factory rent, factory electricity, depreciation in factory, any other kinds of factory cost will be here, right? So this is your other manufacturing cost related to factory or in the factory, right? Now from this, we minus closing inventory, minus closing inventory. So that will be your, cost of goods sold. That is your cost of goods sold.
Teacher, what is purchase return?
Purchase return means you purchase material from supplier, and because material has a problem, you return material back to supplier. That's called purchase return. Like a sales return, you sold product to the customer, but product has a problem, so customer return product back to you. Same thing happened to you.
So you mean the purchase return is the number of the product that we return back to the supplier?
The value, not the number, value of product. You purchase product $5,000, right? And you return this $5,000 product back to the supplier because product has a problem, not the number of product, the dollar value. Everything is dollar value, so it should be dollar value, right? So this is the way to calculate your cost of goods sold, or we also call it manufacturing cost. That is your manufacturing cost. All right. Now, total income minus cost of goods sold, we call it gross profit. We call it gross profit. All right. Everybody understand until gross profit? Now next, gross profit minus operating cost. All right. Gross profit minus operating cost. Operating cost. Operating cost means non-manufacturing cost. Non-manufacturing cost. So what are the non-manufacturing cost? Non-manufacturing cost means any kinds of cost does not belongs to the factory, like as marketing and advertising. All right. Maybe salary for office people. Remember, if we use the word salary means office. If we use the word wages means factory. Wages word used for workers or the people who work in a factory, and salary normally word used for the office people. Normally, but sometimes we also change it. But you can use it. Salary for office people. Office people. Next could be maybe like as bad debts, discount paid, rent paid, interest paid, dividend paid, other expense like this. Other expense. Right. So these are mainly your tax paid, any other expense that you pay, or any other expense, not related to factory, but other expense. All right. Electricity bills you pay for office. Right. So gross profit minus operating profit is your net profit. Net profit. All right. So this is your income statement. Net profit or net loss, it depends. All right. So idea is income. Idea is income minus expense is profit or loss. Profit or loss, right? So this is your income and income, right? That's your income. And this one, your expense, because you lose or you return, right? Expense and expense. All right. So I think I should use another color for it. Yes, that's your expense and expense. And this number is here. This number is here. That's how your income statement looks alike. So this is your income statement. Income minus expense is profit and loss. This is your complete income statement. So you have to prepare like this income statement. Everybody okay with it? Now, income statement is finished. So you have to prepare income statement like that. You have a trial balance will be given in your question. Because what is step 5? Step 5 means we use step 4 to do step 5, right? Like as we use step 1 to do step 2. We use journal to make ledger. We use ledger to make trial balance. And now we use trial balance to make income statement. So in your question or in your assignment, in your exam, you have a trial balance. You don't have to prepare trial balance because you already know in assignment 1 or midterm assignment, you already understand how to prepare trial balance. So in your final exam, final assignment or whatever, I will give you trial balance. So you use this trial balance to make income statement. So whatever information is given inside income statement, you find that information from your trial balance. You just find sales return, find cost of goods sold, find operating cost, and then you calculate net profit. And sometimes, remember, sometimes some information are given and some information are not given. If information are not given, you don't have to ask me, teacher, how can I find sales return? Because I don't see sales return. If you don't see sales return, so sales return is 0, of course. If you don't find a cost of goods sold, if you don't find opening inventory, if you don't find net purchase, so cost of goods sold is 0. Simple. All right. But you have to follow the format. This is your format. All right. This is format you always have to follow. All right. This is the format you always have to follow. You don't need to follow this format. If no information is given, you don't need to write interest received 0, dividend 0, rent 0. No, you don't need to write. But this one is important. You have to tell me how much is sales. All right. If sales is given in your question, how much is sales, right? How much is sales? And how much is sales return? If no sales return, write down sales return 0. All right. If no information about other income, you don't have this information, then you write down here other income 0. You don't need to write down rent 0, discount received 0, gain on sale is 0. No, this one is 0. If these items are given, yes, then you have to show me. All right. Same thing here, cost of goods sold. If the question, you do not have opening inventory, so opening inventory, you write down 0, but you have net purchase, then you write down how much. If you do not have purchase return, you write down 0. Right? And then same thing, you calculate cost of goods sold, and then gross profit, and then operating, and then finally you have to tell me net profit. But you have to follow this format. It's very important formats you have. All right.
So teacher, like account payable, is that we will count it for the income or sale or something? The account receivable?
I don't know. You tell me. You already know everything.
Yeah, we study that. Is the access, our access?
What is account receivable?
The customer will pay the money for us later.
Account receivable, is it asset? Is it liability? Is it income? Is it expense? What is this?
It's assets.
So are we talking about asset here?
Okay.
No, I'm asking you, are we talking about asset here? Do you see any asset here?
No, teacher.
No. So are you asking me why we don't have account receivable? Assets belongs to what?
You belong to our company.
No, I mean, wait. Here, can you tell me where is the asset? Where we write down the asset? We write down asset in balance sheet, in income statement, in cash flow, equity, or notes.
In balance sheet.
Yes. So why are you saying that, teacher? Where is account receivable? Because account receivable not belongs to income statement, right? Income statement about income, about expense. Balance sheet is about asset, and account receivable is your asset. So when we will prepare balance sheet, which is next, I will teach you how to prepare balance sheet. Then we will say yes, account receivable, accounts payable, machine, land, building, bank loan, share capital, drawing, blah blah blah, accumulated depreciation, right? All these things.
Okay, because I heard you say that you going to give us the trial balance, and we're going to figure out which one is.
Yes, I will give you trial balance, but when I finish the balance sheet, then I will give you trial balance.
Okay.
When I finish teaching you balance sheet, then I will give you complete question. But I'm just giving you ideas. You have to use step 4 to do step 5. So everybody okay with the income statement? So now let's move on to the balance sheet. Everybody turn it on your cameras. Everybody please turn it on your cameras. Balance sheet. How your balance sheet looks like. Now talk about balance sheet. So the title of balance sheet is you will write down, title will be balance sheet as on, and here is the date. So obviously your income statement and balance sheet have a same date. They do not have a different date because trial balance has the same date. So obviously balance sheet and income statement also have same date. All right. Now, so your balance sheet looks like this. We always start with total asset. Total assets. Right. In total asset, we have non-current asset. In total asset, we have non-current asset. Non-current asset. And non-current asset, we have land, building, plant, machinery. So you have to write down here all. Land, building, how much, land, how much, for example. Land, how much, building, how much, plant, machinery, blah, blah, blah. I'm not writing all, and then you add them all. So that is your non-current asset. This number is your non-current asset, right? Land, building, plant, machinery. Then you have a current asset. Current assets. In current assets, you have cash. This is your cash, account receivable, blah, 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 whatever, etc. I'm not writing all again. All right. So this plus this, current asset and non-current asset, will be your total assets. That is your total assets. All right. After total assets, because you know balance sheet is total assets equals to total liability plus equity. All right. So now total liability and equity. So we have total liability and equity. So we start with total liability. Total liability. So under total liability, we have non-current liability. I'm writing short, non-current liability. Under non-current liability, you have a bank loan, for example, bank loan. So you write down bank loan here. And then you have a current liability. Current liability, you have accounts payable, bank overdraft, unearned income, blah, blah, blah. You know that. What are the current liability? So for example, accounts payable, blah, blah, blah. All right. So that's your total liability. This is your total liability. All right. Now equity. Equity. Equity, we have three things, mainly two things, but three things. Equity, we have share capital, share capital, you know that. We have share capital here, and we have net profit. Net profit. Remember this net profit? Net profit comes from your income statement. This number comes from your income statement. Right? Net profit. Share capital plus net profit. When you calculate net profit, don't forget to minus in this here, net profit minus drawing. Did you remember drawing, everybody? Did I explain you drawing last time, right? Did I explain you drawing last time? Yes or no? What is drawing? Anybody who knows drawing? Tell me quickly. Did I explain it?
Drawing is lost, right?
But what does it mean?
When the owner of the company withdraw something from business for personal use.
Yes, that's right. When the owner of the company withdraw something for company, especially cash or anything for personal purpose, this is called drawing. So don't forget to minus drawing here. Don't minus drawing in your income statement. Drawing must be minus from your net profit because drawing directly affect share capitals, shareholders' money. All right. So now this is your total liability right here, and this is your equity, right? So total liability plus equity is here, and always remember total assets, which is this, must be equal to total liability plus equity. So means this number and this number must be equal. If these numbers are equal, your question is correct. You know the answer. If these numbers are not equal, then again, you have to go to trial balance and check, did you miss anything or not? Because most of the time, student miss this net profit. This net profit you calculate from your income statement. So student normally miss this type of income statement number. So they have a gap. So balance cannot be equal, right? So if your total assets equal to total liability, which is here, like here, equal. This is equal, right? So if it is equal, that means your question is correct. So balance sheet is finished. And now remember one more thing. For example, some things I did not mention here, but you have to be careful about it. For example, when you have some depreciation information. For example, in your question, if you have here, let's say I'm writing here, let me write down. For example, not building, let's say you have a car, and car is a depreciation. So in your question, if you have accumulated depreciation is given in your question, and depreciation expense will be given in your question. So always remember accumulated, let's say car. So it says that accumulated depreciation on car and depreciation expense on car. So remember that this accumulated depreciation you have to subtract from here, all right? Minus accumulated depreciation. So read your question carefully, right? So remember this thing. So car minus accumulated, don't minus depreciation expense, because depreciation expense belongs to what? Depreciation expense belongs to
Income statement.
Income statement. So this number will be used. You use this number in your income statement. You prepare your income statement, you write down this number. Don't write this number in your income statement. So, and this number you use in balance sheet. That's what we learned in the previous topic. What was the previous topic? Accumulated depreciation. You don't have to calculate depreciation in the trial balance. Depreciation will be given in your trial balance. You don't have to use straight line method or blah, blah, blah. No. All right. So number will be given if you have two different types of depreciation given, accumulated depreciation and depreciation expense. So be careful, because depreciation expense belongs to income statement, because this is your expense. All right. Accumulated depreciation is a total depreciation. So that will be used in balance sheet minus from your asset. If depreciation on car, you minus from car. If depreciation on machine, you minus from machine. If depreciation on equipments, you minus from equipments. But accumulated depreciation balance sheet minus in balance sheet, and depreciation expense will be used in income statement. Everybody understand? Yes or no? Is that clear? Can we move on to the next? Now, next is a bad debts. If in your trial balance, you have bad debts. Bad debts is your expense, right? Bad debts is your loss. But bad debts also affect your, no. No, nothing. So bad debts is normally, bad debts have no impact here. All right. So that's depreciation is the most important point. You should be aware of it. All right. So remember that if in your question you have a depreciation, do not forget to use depreciation expense in your balance, in your income statement, and cumulative depreciation in your balance sheet. So everybody okay with it? So that's all for your topic 5. So topic 5 is finished. Now we have to do some calculation, we have to do some practice question. All right, so anybody has any question? If no question, then we can have a break. After break, we will start questions. I will give you trial balance after break, and then you will use this trial balance to make your income statement and a balance sheet. All right. So we can have a break. I'll see you soon. Thank you. First of all, I'll show you trial balance. So you will prepare income statement only. Here is your trial balance. Just prepare income statement. You don't need to prepare anything else, only income statement, right? All right, so let's have a look at the answer for this question. So here is the answer. Everybody got 6,800 loss? Yes or no? All right, so now let's do it next question. Next question, you have to prepare another income statement. All right. Only income statement. All right, so let's check the answer. Not all of you gave me answer, just a few students, 4 or 5 students. Make sure everybody calculate, all right? Otherwise, I will give you low marks when I'm going to assess your work. Remember that. So let's have a look at the answer. 722. Nobody got the right answer. Check your mistake. Who got the right answer? Kanlin got 722. Check your answer, find your mistake, why you forgot to minus 1,000 maybe. I don't know, someone forgot to minus 1,000 like it's dividend. Like it's here. The dividend is 1,000, maybe you forgot to minus. It's your expense, debit, right? I guess. Dividend is your expense, right? So you forgot to minus your expense. Everybody okay with it? This question? So make sure you know your mistake. So now can we move on? All right.
Teacher, can you show again the chart?
The question?
Yes, yes.
So when I show you question, make sure you take a picture, because for your future reference, for your practice when you do your exam or anything in future, so make sure you take the picture.
Okay.
All right. Anybody has any question, or we move on? Let's move on. Now, again, you have to prepare income statement using this information. This is your trial balance and prepare income statement.
Yeah, I have a question that in your theory, you teach me that all the income and low dividends you block, and now in question choose you minus. I don't understand really.
Can you repeat again?
Yeah, because in your theory, you say that you plot other income, and now you in the exercise
Previous
2.
question.
No, question one, activity 1. You minus dividend, but it belongs to other income, and you write other income plot other income. I don't understand really.
Your question is, when I explain you about theory for income statement,
Yes,
I
yes,
said dividend income is income, so that's why we plus in our
yes,
revenue, right?
yes, yes,
But why we minus here
yes, yes,
1000, right?
yes, exactly. Yeah.
Anybody who can answer this question? She said, why we minus 1000 here? This is dividend, so dividend need to be plus, but why we minus? Anybody who answer me this question?
Because if in the debit column, debit means that is the dividend expense. It decrease
Yes, that's
and
right.
equity decrease.
Enough. Yes, that's it. Thank you. Zwintran, did you understand?
Yeah, I got it.
Okay. Now, remember, everybody, please remember that if you do not understand, is any item like as dividend can be income. Oh, dividend can be income or it can be expense. How can we understand dividend is income or dividend is expense? If dividend is debit side, if dividend is debit side, so debit always expense. Oh, sorry. If dividend is debit side, so obviously it's expense. And if dividend is on credit side, it's income, right? So like as here, loan moving. If I don't write here revenue, so this loan moving, is it income or expense? It's an income because it's on the credit side, right? So remember that this is the very easy way to understand whether it's an income or expense. So dividend in this question, dividend is on debit side. Dividend is on debit side. So that's why this dividend is an expense. So this dividend is expense, right? It's not income, right? So do it now. Everybody finished? Then we can check the answer. All right, so let's have a look at the answer for this question. Four, 5, 6, 5. If you got 4, 5, 6, 5, then you are correct. Check your answer and check your mistakes if you have. So 4, 5, 6, 5 is the right answer. Everybody okay with this question? Yes or no? Let's move on to the next question. Now, the same question. Now, I want you to prepare the balance sheet for the same question. This question, you already prepared income statement. Now, please prepare balance sheet. If your balance is equal, that means your answer is correct. But again, important, the answer, is it same answer or different answer? So when you finish, give me the answer. All right, so I can see 3 students said they got equal balance. Okay, 29, 965. Anybody else? So let's have a look at the answer and then we will stop for today. So here is your income statement and here is your balance sheet. 29, 965.